It looks set to be a turbulent year for the property market. If you're buying or selling, prices are predicted to drop by 10%. But if you're renting, prices are likely to rise. Research by Savills suggests that higher interest rates and the rising cost of living will mean that people will only be moving if they really have to move. Lucian Cook is head of residential research at Savills. Lucian, we talk about average house prices, don't we? And the prediction is that prices will drop by up to 10%. But it's always really different, isn't it, depending on where you're looking. So which areas do you think we're likely to see the biggest changes in house prices this year?
Yeah, well, look, I think there's going to be some really big differences for different parts of the market, and that won't just be geographically, that will also be between different buyer types. So I think the people who will bear the brunt of the increased interest rates are going to be first-time buyers and buy-to-let investors. We would expect to see much lower levels of activities from those two particular buyer groups. Geographically, just because house prices are higher to incomes in the capital, we would expect there to be slightly higher price falls within the mainstream markets of London and the southeast and other parts of the country. And the markets that are likely to be perhaps more robust are going to be those further to the north. But even within a market like the capital, I think you will see some variations and some distinct differences between the bottom, the middle and the top of the market, and the top of the market a bit more insulated because people are less exposed to the cost and availability of mortgage debt in that particular part of the market.
Now, you suggest in your research people only move if they have to. That was the situation, wasn't it, for a long time after the financial crash? The market was really slow and sluggish. So when you say people move when they have to, for what kind of reason?
Yeah, well, I think what you will find is people who are moving for their jobs, particularly, are likely to be what we would refer to as needs-based buyers. You will also see activity around things, I'm afraid to say it, the 3Ds. Death, debt and divorce will continue to drive transactional activity, but a lot in the same way as you talk about retail purchases and discretionary expenditure being affected, it will be the discretionary spend, I think, in the housing market that eases back by far the most.
Let me bring Henry Pryor in. He's a buying agent and a professional negotiator and also a housing market commentator. Henry, let's talk about rentals then. There'll always be a need for some people to move, as Lucian was just saying, the 3Ds, divorce, death, debt, and then people have to move for work. How far can that carry a housing market through?
Well, Winifred, I suspect that, as Lucian is saying, we're going to see continued activity, but probably just not as much in terms of volume, both in the sales or in the lettings market, as we've become used to over the last perhaps as much as a decade. And since the financial crisis of 2008 and 2009, and of those artificially low interest rates, that has driven the sales market in particular, but the lettings market, which has frankly bubbled away on a rolling boil over the last 12 to 18 months, is something that we're all keeping a very close eye on, because it is that sector that's going to feel the pinch as tenants struggle to afford ever rising rents, but also as landlords start to walk away from the lettings market because of the increased costs and legislation that they're facing and the diminishing returns that they are experiencing. So
Henry, are there hard figures around that? Sorry to interrupt you. We keep saying this, don't we, that the buy-to-let landlords are going to walk away. But are there hard figures around that? Are they walking away?
Well, it's slightly early to be able to see definitively. Lucian will have more concrete data on specifically the numbers that are actually turning their backs on the rental market. But it's the buy-to-let investors who are often leveraged. They've borrowed money in order to be able to invest in properties, who are feeling the pinch and probably will be retreating first. But there's still a core demographic, people who are happy and content and still making money in the rental market, and it's tenants and whether they're going to be able to continue to pay increased rents that we're going to be watching perhaps more closely.
Henry, in London in particular, the rental market has just been hot, hasn't it, in the run-up to Christmas, with bidding wars for flats and so on. You're starting to see people post about their experiences. It's like everyone who left their rental in London to go back and live with their mum and dad in the pandemic all decided to go back, in the middle of last year.
Yes, I mean it is a true market. We can see that the demand way exceeds supply, and there would have to be a considerable increase in available rental properties to be able to have a demonstrable effect and downward pressure on rents. So rents have increased in some parts of the capital by perhaps as much as 20%. The government's official barometers are showing a much lower increase through 2022, but it does look like this year we're going to see continued increases in rents as people struggle to compete with one another for the limited supply.
But then, like housing, it will get unaffordable, won't it? Henry?
Well, it is all housing, whether you're
but,
buying or whether you're renting.
Doesn't it reach a ceiling where people just can't afford it?
Well, inevitably there will be people who will struggle to afford not only the current rents but increased rents. But as with those who are buying houses, there will be particularly younger kids looking at renting their properties who are going to get help from their parents in order to be able to do so. And the bank of mum and dad is also going to be, I'm afraid, very much involved in the rental market, just as it is in the purchasing market.
Lucian Cook, have the type of things that people are looking for in a home to buy or to rent, have they changed at all with the cost of living squeeze?
Yeah, I think they have to a degree. I mean, essentially what's happened is that when people go to get their mortgage, they're either more reluctant to borrow as much, or the bank is going to tell them that they're not going to be able to borrow as much. So whilst we had this very strong race for space, which drove that very strong burst of house price growth through 2020 and 2021, and indeed the first part of 2022, that's going to ease back. There still will be some buyers who've got some decent housing wealth behind them, perhaps less mortgage reliant, who will see this change in working patterns. They will continue to look for extra space and the additional office, perhaps. They may well continue to look a little bit further out in the commuter zone, but I don't think that is going to be anything like as noticeable as it has been over the previous 2.5 years. I think you are going to see that ease back, and it is going to be much more a case of finding a house which meets your needs than perhaps your aspirations.
Henry Pryor, whenever the housing market is slow in the UK, it affects a lot of other businesses too, doesn't it?
The housing market is something that we bang on, Winifred, about, and Lucian and I talk about seemingly endlessly because of the impact it does have on the wider economy. Higher house prices mean that people are able to reinvest those profits into perhaps starting new businesses or spending money on the high street, on white goods, second homes, investing in businesses that will enable them to make yet more money to be able to afford more or bigger houses. So it is very, very important, and it's one of the reasons why we do seem to spend an inordinate amount of time talking about it.
Henry Pryor, Lucian Cook, thank you both.